part of the week, but found support near 21,500 levels and bounced back towards the end of the week. Market breadth was also positive in 4 out of the 5 sessions, which indicates that sentiments were positive. If we look at the daily chart, we can see that Nifty has bounced back from 21,500 levels. It broke this previous intermediate high, but it soon bounced back from 21,500, and on Thursday and Friday it surged higher. On Friday it was consolidating in a narrow range between 21,629 to 21,750. So the short-term trend and intermediate trend remain firmly up. The only concern is that 14-day RSI is now making lower tops. As you can see on the daily chart, 14-day RSI has been making lower tops while Nifty has been making higher highs. So it is giving a negative divergence, which calls for caution. But however, the price action is showing that trend is up. And so we recommend sticking with the trend, which is currently up, and trying to benefit from further upsides. So further upsides are likely once the immediate resistance of 21,750 is taken out. This is basically Friday's high. And once that is taken out, we expect Nifty to move up towards the lifetime highs and even possibly beyond. Coming to the sectors, we ended with a mixed bag. Top gainers and outperformers were realty, media, pharma, oil and gas, PSC, CPSC, and also PSU bank indices. Top losers were the IT, metal, auto, and bank Nifty indices. So looking at the charts, we can observe that all the sectoral indices remain in intermediate uptrend, but certain indices have run up faster, and their momentum readings like RSI are now in overbought zone, which calls for caution. So if you look at the charts, we can see that the realty sector has run up quite sharply over the last several months, and the 14-month RSI is above 80. So that calls for caution in this sector. Also, if we look at the Bank Nifty, it is in a healthy uptrend and has recently bounced back from the 20-month simple moving average. But RSI is not overbought. It is still just above 60, which indicates that there is scope for more upsides in the coming months. Similarly, IT has also recently bounced back from the crucial moving averages, and 14-month RSI is not overbought. It's just above 60. So sectors like IT and banking are looking good, while realty is overbought and can be avoided for the time being. Also, media is another sector which offers scope for more upsides. And one sector which can be avoided is the CPSC. If you look at the monthly charts, it has run up quite sharply, and momentum readings are in overbought zone. So coming to our outlook, Nifty has bounced back from the 21,500 levels, and it remains in a short-term and intermediate uptrend. It is now consolidating in a range between the 21,629 to 21,750 levels. A breakout of these levels could see the Nifty targeting the current life highs of 21,834 and even beyond. We, however, recommend a cautious approach as the 14-day RSI is giving negative divergence signals. A close below the recent low of 21,500 could trigger a correction, which could take the Nifty towards the next major support at 21,398 levels. Looking at the broad market indices like mid cap and small cap, they continue to outperform and remain in intermediate uptrend. But if we look at the daily chart, we can see that 14-day RSI is also giving a negative divergence. And even the mid cap is also giving a negative divergence on the daily chart. So while they remain in uptrend, a cautious approach is still required. So coming to our conclusion, we stick with the uptrend as they remain in the short-term and intermediate uptrend. And Nifty could rise up to the current lifetime highs of 21,834 and beyond once it breaks Friday's highs of 21,750. As I've been repeating, the 14-day RSI is giving negative divergence signals, so caution is required. And we expect sectoral rotation as indices that have become overbought may correct, and money could flow into sectors that are still not overbought, like banking, IT, and media. Crucial supports for the Nifty to watch for a short-term reversal are at 21,500. Now that's all from my side. Now over to Ajit for the derivative view.
Yeah, thank you, Subash. Is my screen visible?
Yes, go ahead.
Yeah. So what we can see now, we'll look the market from a derivative perspective. So what we have seen is during on Friday, we have seen a long build-up in Nifty. Where we have seen a long build-up in Nifty where open interest has gone up by 2.24%, with Nifty rising by 0.24%. But there was a minor long unwinding during the week, where open interest has fell by 4.4%, with Nifty falling just by 0.09%. And there was a long unwinding in Bank Nifty, where we have seen Bank Nifty open interest shredded by 0.28%, where Bank Nifty falling by 5.5%. So there is some sort of a long unwinding which has happened in Bank Nifty, but there is a good amount of long build-up which has happened in Nifty on Friday. So put writing was seen at 21,600 to 21,500, and call writing have been seen at 21,800. Let us go deep into the open interest kind of a data, where we can, with the help of the data, we can gauge where the market will head and we can plan for the entire week. So if we look at the open interest distribution, we can see here. We can see that 21,500 there is a huge open interest in a put side, and whereas 21,800 there is a open interest on a call side. So what does it mean? Whenever there is a huge open interest, it means that the call and put writers have come into the market at those levels. So they have done a put writing at 21,500 and a call writing at 21,800. So going forward, these two levels would be our support and resistance zone. So what we can do, we know that the market is continuously making higher top and higher bottom. In this case, it means that it is an uptrend. So every uptrend, what our simple strategy would be, we will buy the dip. So where would be our support area in those dips? So we know that 21,500 has, there is a lot of put writing has been taken place. So whenever in uptrend, we have to look from a support kind of a perspective. So we will have a strong support at 21,500. So whenever market approach 21,500 to 600 level, we can build our long position in index, and we can look up to the target of the next higher open interest data near to the call side. That is 21,800. So our plan would be buying near to the 21,600, keeping a stop loss of 21,500 and looking out for 21,800. So what happens if 21,800 gets breached on the higher side? So whenever that happens, the next highest open interest is around 22,000. So market will definitely market will act and go near and approach near to the 22,000 level. So our plan would be, once it breaches 21,800 level, we can next level look out for is 22,000 level. So to add and support this data, we have also long build-up seen by the FIs. So on Friday, they have bought 485 crore with open interest going up by 1,472 contract. So this is also supporting the market, because smart money is coming into the play when market is heading upwards. So when market goes up with volume, with good smart money, that time the uptrend will be intact. That we can look from this kind this FIs long to short data also. When market was coming down, they were unwinding their long position. They were not in short position, they were unwinding their long position. And as soon as when market tried to go up, they are again creating the long position. So whenever this kind of phenomena occurs, it means that market is going up with a good kind of a volume. So that time the uptrend will remain intact. But when whether it is an uptrend or downtrend, we have to keep a stop loss. So in this case, we are keeping a stop loss of 21,500. If we look from a sector point of view, we can see FMCG, defense, media, pharma. Majorly, we'll focus into pharma because a lot of pharma stocks has bottomed out and they are in a decent uptrend. So if we want from a stock perspective, sector perspective, we can majorly concentrate in a defense and pharma kind of a stock, where in a dip we can buy and we can look for a higher targets. So the outlook for the Nifty is hold long with 21,500 stop loss, because long build-up is seen in the Nifty and Bank Nifty futures. And upside we can look for 21,800 and 22,000 level. And for Bank Nifty, keep a stop loss of 47,700 level, where on a higher side we can look out for 48,000, or a higher side we can look for 49,000 and 49,500 level, where open interest has been taken place. Over to you, Devarsh. Thank you.
Is my screen visible, Ajit?
Yes, sir, it is clearly visible.
Okay, thank you. So, as my colleagues pointed out, first week of 2024 has been little soft. Markets decline and interest rates move higher this week. And because of that, S&P has actually corrected. Let me show you chart also. So this is the chart of S&P 500, the largest market in the world, the American markets. And as we can see, around 4,800 levels, it has started a bit of a correction. Now, the larger trend, which was in the Russell 2000 or the broader market of US, there we have seen a bigger correction. So US markets are in a bit of a downturn, and if you see the longer term chart, uh, after making a high near the 21, it has been consolidating near the lows, the broader market, compared to the larger market, the benchmark market, which is back to its all-time highs. So the trend in US markets or in the global market is that the from selected stocks, breadth is widening. In Indian market, we have seen that the small cap and mid caps have done really well, and through this presentation, I can show you that. See, in for the last fortnight, we have seen Sensex and Nifty go up by around 1.5% to 2%, while mid cap is up by 5% and small cap is up by almost 4%. So the outperformance of Indian market, especially from the mid cap, small cap, is actually quite accentuating. The Sensex and Nifty are up about 4% over the last month, while the mid cap and small cap are up about 7 and 8%. So in a market where global markets are stable or rising, our markets are outperforming. When they correct, we will consolidate. I also wanted to show certain other indices. One of these is the China, which is the worrying. Look at the Chinese market. After making a high earlier in 2016, again one more rally happened and it made a high which was a much lower than earlier high in 21, and now continuously it is coming down. Chinese market and Chinese stocks are a bit of a worry for global markets. And one more thing which we need to see is this: the money is now also moving into other alternative like Bitcoin, which made a high in 2021, corrected sharply, but from lower levels, almost it has gone up 3 times, from almost 15,000 levels to 45,000 levels, approximately. So these are the beneficiaries: India, Bitcoin, Nasdaq. These are the markets which are doing well, while others are struggling, as we have pointed out, especially the Chinese market. And in Indian markets, as my colleagues pointed out, real estate, healthcare, and power are the outperformers. They have done well, while IT and technology is struggling. Now, let me show you why they are struggling. So recently, our institution research has come out with a result preview for the IT services, and this report is also available on our website. Now, I would like you to check this portion. keep an eye on this portion. At aggregate level, QOQ only 0.3% kind of a profit rise is expected out of all the companies, and 2.8% decline in profits on a YOY basis on an aggregate level. There are individuals like one-offs where Tech Mahindra and Wipro are likely to show little lower numbers, while companies like Zensar and others like LTTS are likely to show some good numbers. So looking at this, we also have a table where most of them are actually reduce or add. Hardly LT Mindtrend, Persistence are in a buy range, and maybe one Birlasoft. Others are not offering us the great upside from here. So this is the reason why we see that the IT stocks have not done that well. Okay. Now coming to the calendar, Japan has a holiday on 8th of January. Other than that, nothing significant is expected in any of the international economic calendar. No large meeting or monetary policy announcements are there. Recently, we have issued one BSPL calls. I am sure you have benefited couple of fundamental calls. I won't take much time to show you the track record, but you know that the opportunities are enormous and we are making good use of all these opportunities. I also would like to show you the recent monthly strategy report which we have issued. Apart from the recent announcements and developments, it also has a outlook starting page. It's a 18-page report. I'll show you the title. This is the title of the report. 10 pages of information and data. From 11th page we have outlook, where we are given forecast for 24 and worries about 24. The consensus forecast is that the US is going to have a soft landing, so they are able to increase the interest rate and keep it steady while the economy is cooled off. Crude is also a factor, and flows. Important point is that the $172 billion of new flow has come into global markets. As I pointed out, worries are about China is there, global debt situation is worrying thing. And one more important point which we are bringing out through this strategy is that as long as the interest rates are in a pause mode, like what we have now, the markets continue to do well. So interest rates are in a pause mode in US, and they are likely to cut from somewhere between March to May. So till that time, US markets are likely to do well. But after the pause, when interest rates starts, they cut the interest rates, or they start the cycle of reduction in interest rate. That is the point where global markets and especially the S&P 500 finds a correction, because after a steady rise of economy and a stable interest rates, when would they start cutting rates? Only when they are severely worried about the growth slowdown, they are worried about reduction in jobs. At that time they will start cutting the interest rates. So as long as they keep the interest rate steady, the environment for the global equities will be conducive. But as and when, whether March, April or May, whenever they start cutting the rates, that is the time we will become negative on the equities. Right now we are cautious. We are hoping for a continuation of this rally, but we are also likely to take some money off the market. From around 15-20 leverage MTF recommendations, we have decided to come down to 10, and we are keeping that trend. We continue to replace our recommendation as we keep booking profits, but we are not going to be aggressive. We are likely to favor more large cap rather than mid cap and small cap in 2024. So Asian markets are giving a positive growth impetus to the global economy. India is the one which is leading the market. Stock future OI is increasing, and that is one big of worries. Another worry is the impact of El Nino, which will be available in April and May. Most people are worried about the monsoon this year, and also cyclicality of the markets. Usually in a leap year between January and February, we have seen some dips in the market, like in 2000, 2004, 2008, 2012, and 16 and 20. So history is of some guide, and looking at the market positioning, looking at the sharp rally we have, if there is any negative news, if there is any negative development in the month of January or February, as history suggests, the corrections are deeper. So advice for the 2022 first half, especially the January February month, is that keep your greed under control, keep leverage positions light, participate, but participate where quality of the stocks are good, quality of stocks are in large cap stocks compared to mid cap and small cap, where you keep a little lower valuation, lower exposure. On the valuation side, we are trading near aggressive levels. These are not very low levels. So 23.5 times FY24 and about 20 times FY25. So the potential upside at the index level is not that high. Individual sectors and stocks will have to find out, and that's where we are bullish on large cap banks, industrials, real estate, power, and pharmaceutical companies. We are underweight on these staples and discretionaries and other sectors as pointed out. So this is a report which we have recently issued. I recommend everybody to go through it. So that's what we wanted to cover this time. We aggressively, we have seen a market going up aggressively. It is time to remain little cautious on the overall market. Participate, but participate with the outlook that if there is any reversal, we'll be first to come out of it. So dance, but dance near the door, so that as soon as there is music stops, we can come out. Okay. Now we have some time, 5 minutes time, so we can take some questions. I'll wait for question queue to get assembled. Before that, let me ask one question each to Ajit and Subash. You can, by the time you can put in, type in your questions, depending upon the screen you are using. You should see a question mark symbol. Press on it. Chat box will open. Type your question in that chat box, and we will try to answer as many as possible. So, depending upon looking at the data in your presentation, Subash, you yes. I see that the one of the sectors where we are looking to see some upside is the media. Can you elaborate a little bit?
Yeah, I'll just open the chart of the media index. Yeah, so yeah, if we look at the monthly chart, we can see that it has made a double bottom around 1600 levels, and now it has also almost crossed the previous intermediate high of 2485. So, and our monthly RSI is also at 65 levels, so it's not overbought, and we are well below the all-time highs of around 3600. So chartically there is scope for more upsides, because there is it is not overbought and there is scope for more upside. It is above the moving averages also, and the pattern is looking bullish.
Okay, so which sector to focus in coming weeks? Coming week we will keep focusing on the large cap banks, pharmaceuticals and media, as Subash pointed out. IT sector, Sanjay Yadav is asking, so IT sector, our view is little cautious. We'll wait for the results. Post results, the expectations are muted. So if any of the companies are able to come out with the numbers which are better than the subdued and muted expectations, then there could be a sharp upside and we will participate. But other than that, we will continue to remain little cautious on IT stocks. PSU banks are the one which is leading the market, and we continue to like it. Surendra Keshari is asking. Public sector as such, Sachin Gaikwad is asking. So public sector as such is been bullish. Not only last year, 2021 Diwali, we have been asking people to invest in PSU stocks, and we have been bullish. Some of the bank stocks have done really well. So why higher increase in stock future could be lead to volatility. Sarthak Singh is asking. So higher open interest means there is more leverage positions. If any negative news or a correction comes, the large open interest, if it is held by the weak hands, may lead to volatility. And that is what our conclusion is. The open interest is at all-time high and it is increasing, so it is better to keep an eye on. Samir Giri is asking which sectors to be keep on track, keeping in budget in mind. So this year it will be the 5th year of the government. Usually in the 5th year of the government, and mostly they will not have a budget. They will only have a vote of account. So there will not be a proper budget this time. It will only come post-election in July, June or July month. Before that, it will just be vote on account. It will be just an accounting exercise. No bigger announcement are usually expected in a budget of the last year. Yes, there could be a correction before the election results. So from now to election results, we are going to keep an eye on various levels. Metals are still struggling. We had seen a good upside. Suresh Kumar is asking. So Chinese markets are giving us a little of a worry, and we are a little cautious on China. That's why we will be cautious on all the external facing metals, the stocks which are dependent on the exports. Companies which are doing internal business and they are doing businesses for India, local mining companies, local steel companies, SAIL, NMDC, PSU companies, there is still some room for upside. Ajit, where have we seen build up in sectors? You mentioned in your
we have seen build-ups in long build-ups in reality, infrastructure, oil and gas, and farm. Whereas in technology sector, we have seen some bearish kind of a build-up.
Okay. Thank you all. We have answered all the questions which are there. I hope this has been useful. We will keep coming out with various MTF and fundamental recommendations, and also trading and future recommendation. Keep making use of it. The going has been excellent. The team has been able to come out with excellent recommendations in fundamental as well as technical side on MTF side. I hope you have benefited it. All the track records are available with our relationship managers or our web portals. You can make use of it. All the best, and I wish you all a very happy and prosperous 2024. Thank you, Subash. Thank you, Ajit, for joining, and we can
Thank you,
conclude.
Devarsh. Thank you, everyone.
Everyone, bye.